Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Friday, June 3rd, 2022. I am going to start out with a very brief update on the equity markets. Nothing really new to report since the last post I got out to you, but just wanted to kind of reiterate or re-highlight a few things I've highlighted recently, and then do an update on the energy sector with actionable trade ideas and analysis there. And that'll include crude oil, coal, and natural gas, which all kind of go hand in hand. They're all competing energy sources. So if crude's rallying hard, obviously it's going to increase the demand and the prices for natural gas and coal, and vice versa. So we'll get to those in a second. I had some at least one additional sell signal in the coal stocks. That happened while I was doing the video earlier, so I'll go over the list. I've culled through my list and I have my favorite picks. And I'm starting to, as of today, build a basket of short trades, scaling into those trade ideas, and that's how I'm going to trade that sector. All right, let's start out with QQQ. Really, again, not much to add. I give you this alternative trend line because that's what I had on the 5-minute chart here. And remember, we did have a divergent high recently on the indexes, SPY, IWM, QQQ, as I pointed out this morning. So there could be more downside, but as I said, I still favor another thrust up. I think these divergences will remain intact and grow for one more thrust up, and it's not going to happen today. There's only an hour and 15 minutes left in the trading session. So if I'm right, it's going to happen next week. But look, I still can't rule out anything. Can't be ruled out. I mean, maybe this is the end of the entire bear market rally. I really don't think so. But as mentioned, I started taking some profits yesterday, even in swing accounts. Posted that in the comment section right after the close when Amazon hit full tag of the second target, and then we had both a QQQ as well, or more importantly, I should say not IWM, our NQ, the Nasdaq 100 futures. I'm going to get to that in just a second. Now, somebody asked on the site today. There was a question in the comment section. Hey, could this be considered a bull trap? No, not to me, because number one, that wasn't a very well-defined level. There wasn't a lot of consolidation. I wouldn't consider that the type of breakout. I mean, one could make that case because you had a previous reaction high. But on QQQ, although it was a breakout above my third target zone, remember at the very same time, it was a rally exactly into my T3 zone on the Nasdaq 100 futures. And, which I didn't bring up this morning, but I've covered it, had it on that chart, a perfect tag of the 38.2% Fibonacci retracement. So let's talk on that real quick. So again, this is where this trend line is just as valid as the other one, just as many tags, price support, and this is still the bottom. Remember I gave you earlier in the week my a minimum pullback target zone, which was right here on basically on NQ. I give it to you, and then a max down to 301. So I will continue to add back long exposure, which I did today there, and if we gap down next week to that level, but not below. Even though the big breakout was down at 294, and that is certainly a possibility. This is just how I trade. That's where I'm willing to add to, but not below that level. And I will most certainly look at if I have any longs. If we get down to 294, that's the point where I start to exit those longs and maybe even re-enter some swing shorts if we get down there. But first things first, and that is I favor a bounce from around this level with I don't put odds on it, but I'd say 60% or more right here, maybe even 30% that we go down to the 301 level. So again, the bounce will probably, if it's going to happen, maybe it'll materialize today into the end of the day. I don't know, but I can tell you we're not going to have any meaningful move up, here until next week if it's going to happen. So those are the levels to watch. And now, as I mentioned, Nasdaq 100. This was, I know it looks busy, but that's the 1-month chart, 60-minute. I've been working off of way back here and here as well, and reiterated here, and especially on my hard buy above. That's comparable to the 294 level on QQQ. That's 12085. It was big, huge resistance to me, and just a beautiful breakout point, long entry. So that was the aggressive long moment. What I tried to convey today, and I've been trying to, the easy money's been made on Amazon, on zoom on the Nasdaq 100. I think there's more upside, but this is what you're going to get. You get the explosive move off the bottom. It was mostly unidirectional. All we had to sit through was a minor little bull flag consolidation, and it was, at that point, when I say the easy money, because you're never underwater. It's just going up, up, up. Oh, look at how many green 60-minute candles there. But then what happens is you start hitting resistance, you start hitting key fibs, and sellers step in, and then you get this kind of consolidation. Now, this has been consolidation for about a week or so. So if we can pop that, we could have another thrust up. And again, that's what I favor right now. So let's just leave it at that. But when you look closely at T3 zone, and I highlighted this before, again, I know it's a busy chart, but I have Fibonacci retracements. There's the 31.2 right there, right smack in the middle of the T3 zone. And that's what we hit last night. In the just after the market closed in the after-hour session. So we put in that divergent high, and that's where I posted closing all my NQ long positions in my active trading account, and even then turned around later that day right there when that was taken out and shorted that for a quick pullback. I didn't get it all, but this is where I'm back long again, and I'll take those home into the weekend. Not much. I'll always lighten up during the weekend, and if we go down to that max pullback target zone 12,350, that's where I'll add more, but not below. And maybe if I get stopped out of that trade, we'll see what things look like, because this is, you have a nice uptrend line coming in here that would come in with 12,085. So that's certainly a possibility. Again, I just don't want to see much more than that. Talk about that fib retracement just so you can see it clearly. Put it on a different board for you here. The fib retracement I'm referring to is from this major reaction high right here. Remember we broke out of the 60-minute bullish falling wedge pattern back here with positive divergence? That was the rally. The end of that was that reaction high there. So if you measure from that reaction high, which was March 31st right there, March 30th, I'm sorry, 29th actually, that's when that high was, that peak high. You measure down to the recent lows, and boom, you can see here you hit it to the button. So to me, nothing in this world is better when you have solid price resistance and Fibonacci resistance that line up. And I always say it never, ever fails to amaze me how often they do. I always put my price levels up first. That was a resistance zone. Then I put up my fibs, and the fibs will very often overlap with price resistance. And why are fibs important? Well, they just are. Read about them. They're everywhere in nature, in the natural world. It's almost uncanny. Scientists have a hard time explaining how it works, from the veins in a leaf to the shell of a nautilus and many other things out there. And in trading, they work, whether because there's something to it or just that people use them, and there's a certain subset of traders that just trade exclusively fibs or largely incorporate them into their trading. So if they're looking at it as resistance, then I'm looking at it as resistance as well. And so therefore it works simply for that reason if a lot of people are trading off those levels. Okie doke, so that's the market. Let's roll into energy real quick. All right, USO is a crude oil ETN. Really the probably the best, most accurate one out there. It's most liquid. It's been around for a while. New 52-week high. And on face value, 52-week highs are bullish, because when a security makes a 52-week high, it means every single person holding that position at that point in time, at least over last year or an all-time high, is profitable. So you have no remorseful holders that want to just get out. Now, I would say this, that new highs that occur with negative divergences often fail. They have a much higher rate of failing. And so that's it. So there's USO, slightly new high, 52-week high. You've got trend lines galore right here. There's one. There's a minor trend line. And I still maintain this swing target down here. Well, I'm showing you now in USO about 58.60, and you have an uptrend line here that'll come in, so we'll zigzag our way down there, I think. It's not a hard, it's really not even, there's not even a sell signal now, but I made the case based on the futures charts to start taking a position there. We had a breakdown. I just jumped over to CL crude futures, and you had uptrend line there on the 60-minute chart. You had a divergent high right here on the PPO divergence, but look, any marginal new high, and you'll probably get it on the futures, a little more upside. Let me clear these lines out so you can see it clearly. Let me even zoom in a little bit so we can, my 60-minute charts are really used to hone down on the entries and exits. Daily charts kind of paint the bigger picture, as do the weeklies. But so any equal or marginal new high, it can be an equal high as long as you have the indicators making lower highs, which at this point you do, and you will if we go up into the end of today or early next week. And that would set up the stage for a nice divergent high on the 60-minute chart. You had a trend line break here, and I highlighted it as a breakdown objective short entry. We're right back to that level there. So I'm giving this one a little room. I do not have a large position, but I plan to add to that. I am starting to also, as of today, accumulate in those short those coal stocks I told you about. So let me show you natural gas real quick because it all ties in together with the energy sector. NG daily chart, I've covered this many times recently, so I don't want to spend a lot of time on it, but divergent high, nice uptrend line there. Pretty big support here at about 8.128. If and when that goes, we go hit the trend line, probably have a reaction. Ultimately, I think we're coming back down here to 6,525 right there on NG. That's still my target, which is going to be from, I guess, where I showed you the other day, about a 23% drop. So that one's still looking good. Again, that's the daily chart for you. This is a 60-minute chart. NG is really stalling out here. Natural gas futures, divergent high at that point, broke that trend line, sell signal there. Been stair-stepping lower, had that little whipsaw right there before the inventory report came out above that level that I really want to see it remain below, about 891, and it's still below it. Just need to take out this uptrend line, and to do so will, I think, bring us down quite a bit lower. So still liking these. None of them are all-in heavy moments yet, but short, I've got a pretty good chunk of natural gas short. Plan to add to my crude oil and just need to see a little more work. And then let's talk coal stocks. Coal stocks, let me grab that chart. I did a whole video for you the other day, but I've cleaned it up now. I cleaned up my watch list. And I'm going to load this here and just go over the ones that stand out to me so it won't take so long. Okay, BTU. This is one of the baskets. See, there used to be an ETF out there called KOL. Their ticker was KOL, and that was the coal sector ETF. Best of my knowledge, that's retired. If there's another one out there, let me know. Or if there's any coal stocks that I didn't cover and that you think need to be included in my list. It's just a watch list I built years ago. Traded these guys long and short. One thing I can tell you about them, that when they move, they move. They're also relatively thinly traded. So if we get a reversal in the energy sector, you could see a crowded rush for the exits, because thinly traded securities, especially when institutions, large positions are being unwound, you don't have the liquidity, and they tend to go up fast when there's a lot of buying pressure, and they tend to drop hard. I mean, this little correction right here off that divergent high, I'm going to measure it roughly, was about 60%. So you're looking at a chart, and it might not look like a lot to you, but these are huge moves. I use log scaling. That's a drop. Here's 20 and there's 10. So when the stock drops from 20 down to 10, that's a 50% drop. Stock gets cut in half. You can see my target. So what I have here, I showed you this the other day, the bearish rising wedge pattern, complete with negative divergence, as I like to see. There was a breakdown, your sell signal there. It's been walking lower, but I've also added on here, you can see question marks. It says LS, meaning left shoulder, head, right shoulder. And there's question marks because it's not a fully formed pattern. But what I've done in the past, what I like to do quite often, if I see a potential head and shoulders pattern forming, here's what the textbooks will tell you. You wait, you see a left shoulder, a head, and then a right shoulder. You want to wait for the right shoulder to form. Ideally, you want to see both the drop off the head and the right shoulder on increasing volume, which you had so far on the head, but we need to get that drop on the right shoulder. And then this is your neckline. If you're not familiar with what a head and shoulders pattern should be, look it up. Stockcharts.com, they have a great explanation in their chart school. You could check that out as well. And so the traditional traders will wait for a fully formed pattern, and then they wait for a breakdown. The sell signal comes at a break of the neckline. But when I see what looks like a good pattern, you can make a case there. You get the left shoulder. You also, if you run this line, you can see that yellow line I have there across. You have not pretty decent resistance as well, quite a few reactions. So in that case, what you can do, because the risk reward is excellent, take a shot when the right shoulder looks like it may be formed. You're up, the symmetry of the pattern is nice right now, meaning here's your left shoulder, head, right shoulder. That would be nice symmetry if we turn down here and form a right shoulder. You take a shot, call it a pot shot, whatever you want to call it, with a relatively tight stop. You know, relative is, again, relative to the move and the security. You know, a tight stop on treasury bond futures is going to be a 1%, maybe 2% stop. A tight stop on something like BTU, a coal stock, might be 5, 10% or more, because you're trying to swing down. If this one pays out from where we're at today, if you took a shot, and I think we're coming down here to 954, that's a 62% drop. So if you gave yourself a 10% stop loss, you're talking better than the 6-to-1 RR, or risk reward ratio. All right, so even to get down to the neckline is going to be a 26% drop. So that's why I take a starter position here, because we get down there, I'm already that much more profitable in case there's any whipsaw down through there. And again, stops on the other side of just above the recent highs for me, not too far, a little bit above that yellow line there. All right, so that's one of my favorites right there. And again, watch to see if you get that development. Watch to see if we start moving lower, especially on increasing volume. That's what you want to see. Then you have a finalized pattern, and this is your all-in moment where you then take that up to a full position, or at least I'll take it up to full position on a break above 19, the neckline there, the pattern. First stop, 14.17, hiccup there, and then come on down. That exceeds the measured target. The measured target is this line right here. You take the widest part from the head down to the neckline, which I did here on that line. That gives your measured targets about 11. But I think momentum will, if I'm right on this and this sector has that quick unwind trade, it's going to probably carry this one down to about that 954-ish level there. All right, AMR, and the whole point of, by the way, of the shotgun approach I talk about, taking a basket and not just one or two of my favorites, is diversification. You never know which one. Murphy's Law says if I pick one or two out of the sector, those are going to be the one or two that don't pan out. So I'll take, at this case, I've only started with 3 today, but I've got about better than a half dozen here, maybe 9 or so on my list. This is one of them. This one hasn't broken down. So the way it'll work, if I get a sell signal soon, break of this trend line, this minor trend line here, that's a minor trend line. This is my primary trend line. So I'd swing it like this, come down, cover, reverse on the primary trend line, or maybe just sit tight. It depends what's going on in the sector there. And I'm swinging this one down to $72. That's my target. So that would be a drop of about 57%. No sell signal yet. Arch Resources, formerly known as Arch Coal, I believe, has a megaphone, aka broadening wedge pattern, divergent high as well, negative divergence, and nice price support right here in the middle, about 153.70. So that's the sell signal there, a break of 153.70. Or, to be safe, you had 2 spike lows, both candles closed on it that day, and you have a few. So I'm going to give you here, let's just put a line here. I'm going to set an alert to remind me, 150.26, call it 150 if you want to be safe, right? And let's set an alert on that line, and then I will be short. I'll add this one to my basket, if you will. Trend line right there is above, that's the initial target right there, the uptrend line, which would be about a 20% drop, and quite likely more. I may revisit this chart, I may play around. Some of these are old lines that were targets on the way up or resistance levels, but I think maybe all the way down here to 75, we'll see. ARLP, not triggered a sell signal yet, so this is why it's not an all-in moment. To me, it's just an early ease, start scaling in small positions, just in case there's a big gap down on next week. Plus, some are breaking down. That's the main reason. If none of them had broken down, then there's no entry. That's a little minor uptrend line here. I think when that minor uptrend cracks, you're going to go down to the primary uptrend line that I just highlighted here. That primary uptrend line comes all the way back off the lows, early, mid, or about October of 2021 right there. So let me get rid of it. Well, I'll just color it up for you. So this is a primary uptrend line, make it blue. If that is hit, that's going to be a drop of, I got to grab about where we are. I need to grab a little above so it doesn't move the trend line. Then I'll stop a little above that trend line, about 17% drop there. And certainly the potential, I think ultimately 1268. I'll just color this up now. So we remember that's ultimate swing target right there, 1268. CEIX, ready to crack, but not there yet. You can see we're sitting right on the line. This is a nice, clean, really nice and well-defined uptrend line. Divergence has been building. It's not as if it doesn't work. That was a divergent high, and the stock dropped from there. That divergent high, it fell 20%, 19% that is. There was a drop, probably 15. So it keeps dropping on each, but these are DH1, DH2, and DH3. And you can see with each divergent high, there's less and less vigor. This thing's losing momentum. That's what the momentum indicators show you. That's what the PPO and RSI are, momentum indicators. This guy's losing momentum, and when it breaks, it's going to be a nice fall down. $36 is my target on this one. If hit, that's going to put about 34% profit or gain, if it breaks down tomorrow, that is. If it goes higher, then it's just a farther drop. SXC, Suncoke Energy, this one already broke down. So again, there's some evidence that the sector's top. This was a divergent high right here, negative divergence. There's a divergence. Sell signal, it's been stair-stepping lower. And once it takes out this little price channel here, probably continue down before all said and done, 592. Just I'll call it $6 be the target on that one. So still another 27-28% downside. METC, sell signal to come on a break of 1324 right there. Let's set an alert. I probably already have one, but just to be safe, can't hurt. There's another one. Here's another coal stock that topped with the divergent high, negative divergence, big old drop there with the trend line break. Divergence extended, double top high there. And then the primary trend line, that was a nice clean trend line that broke, back tested again, and it's testing this 1324 support. Breaks down, it's going to head to 1090, takes that out, 965, and if things get really ugly in the sector, it could fall as far as 621. Right now, let's just say 1090 is my near-term swing target, where you probably get a reaction if it's hit. So I'm going to color that one up as well. NRP, that one's cracking today. Well, it cracked earlier today. I think this is one of the three that I took, if I recall correctly, along with NC and one more. That, again, it was cracked below. This is why sometimes it's why you want to wait at times for a daily close below. We're right back on the line, but I think it's a matter of time. Look at these divergences. These suckers are ready to pop any minute. And again, it's going to take crude breaking down. So that's why I started the video with crude. 4010 first target. That's going to be if hit, and that should be a quick move down once the sector buckles. Once you see the majority of these break down, if you get all the sell signals going off, that's about a 13% drop. Let me set an alert there as well. Next stop 36, and my preferred target $36, and the uptrend line. You can see they come in together, so that's about a 27% drop. It'll look something like this. Get down there and then bounce. If that trend line gets taken out, there's certainly the potential for a much bigger drop, 28.63 and maybe as much as 22.24. That'd be a while to get there, probably a few months at least, but certainly a possibility. NC, this is the one I had a price alert as I was doing the video earlier, so I took that one. So far, well below the trend line, 5% drop, and that's what you want to see on a breakdown. You want to see an impulsive move. All the better if it can close comfortably below that bearish rising wedge today. Targets 51.23, 44.79, 38.75, and my final target before all said and done is this primary uptrend line, and or maybe even this 29.51. That's the potential. Again, it's not going to go straight there. That's about a 47% drop. That 50%ish number is coming in a lot on a lot of these stocks when I look at the charts. you know, but it would be as an active trader, there'll be plenty of counter trend rallies to trade along the way if I am correct in these, and these guys are at or near top. There's the sector, just to see IX 1050 on TC 2000. So you have this minor trend line, you have a divergent high. This divergence has been building. So once this breaks, the sector is broken down. That's the majority of the the components in there, and you'll hit the trend line. And let me move this old line up here and say right here, this would be a max target at this point in time. But it's possible if it gets really ugly, I could give you a max target of 523, but 736, let's just calculate that if the trend line gets taken out. So let's just take it from where we're at now. Let's get closer in. Trend line 1, if hit, depending on when hit, about a 26% drop. 736 would be about a 35% drop. And my if things get ugly target down here, about 523, would be about a 54% drop. And that is it. So those are the things to watch. We'll see if these charts pan out. So again, you had USO, crude oil, daily chart and weekly. You've got a nice divergent high here on USO, close to it as well on the futures. UNG is the ETN for natural gas. I already made the case for that quite a bit. Divergent high 1, 2, breakdown 1 here, back test, breakdown 2, and this should be the nail in the coffin. If we take out 2754, take us down to my targets like this, boom, boom, and then finally this uptrend line, 2254 if hit from where we're at right now. And the uptrend line, depending if we get there, about 22% drop down to the 2254 level. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. This may be my last video for the day. I got to run out here right after the close today. So if I don't get anything else out to you guys, have a great weekend.